It's my pleasure to present our next speaker, the Dr. Joe Galvani. The Dr. Joe Galvani is a quantum strategy consultant and former core innovation research lead at the Global Edge Fund. He holds a PhD degree in quantum communication from Telecom Paris and has led pioneer initiatives in quantum computing and generative artificial intelligence applied to finance. Before joining the financial industry, he served as an associate professor in physics, where he initiates a quantum computing research activity and authored several peer-reviewed publications. His work ranges research and enterprise strategy. Beyond consulting, Dr. Galvani actively supports global education and outreach efforts to accelerate the practical adoption of quantum technologies. The title on his presentation is Quantum Computing in Finance, Optimization, Machine Learning, and Cybersecurity Frontiers. Thank you so much, Joe, to stay with us. You can go ahead.
Thank you very much, Braulio, and hello to everyone. My name is Dr. Joe Ghalbouni, and thank you for the introduction. I'll start by sharing my screen. Can everyone see my screen okay?
Yes, Dr. Joe, we can see.
Okay, thank you so much. So yes, today I'm going to be discussing a little bit of the work I've been doing for quantum computing in finance. I'll also touch a little bit on cybersecurity, which will continue a little bit on the previous talk, but also always with a focus on the financial sector. And the reason why there's definitely a big interest in that for that vertical. As Braulio mentioned, I have a PhD in quantum communication from Telecom Paris in France, and then I was an associate professor for 8 years at the Faculty of Sciences of the Lebanese University back in Lebanon, and I started the quantum computing activity there. And always the challenge with the countries like Lebanon is that you don't have a lot of resources, but yet we were able to do something and put the country on the map with peer-reviewed papers, with internship students, with PhD students. So I say every time, when there's a will, there's a way to do things. And so this has been an amazing journey. Then I wanted, to jump on the whole momentum of the industry, because for someone like me who graduated back in 2013, you didn't really see anyone of the industry really doing quantum. It was really in academics, it was in labs, etc. And so once we started to see that momentum going, that's really what I wanted to jump on the train. And the Point72 Hedge Fund was at the time hiring for an applied quantum computing researcher, and that's how I obtained the role. So I'm really happy so far that my journey has allowed me to really merge the words of academics and the word of the industry, and in particular finance. And that's what I would like today to show to you. So like Braulio also mentioned, after working as an applied quantum researcher, I was promoted to be the core innovation research lead. And that's where I really got extremely familiar with generative AI. And that has really been a plus in my opinion, because generative AI and quantum really work well together. It can be both from being able to write quantum code to also having how quantum can enhance AI and machine learning. So let me start here by a little bit of the explanation. So finance at the edge of computational complexity. So as you know, financial institutions process a lot of data. So they rely on a lot of market data. They try to understand the behavior of markets in general. So that's one aspect of it. And they try to understand a bit the tendency that is related to how much risk do I have, how much exposure do I have on my financial assets. Is it safe to provide a loan for that entity, to provide a loan for that person, etc. So they have a lot of mathematical problems that they need to solve in a computational manner. And since markets are extremely complicated to model, we usually rely on a lot of simulations that allow us to kind of have an idea of how things are going. But as you can imagine, with that amount of data and that amount of scenarios, the computation becomes extremely costly and very quick. So if you want to really have an accurate view of the market, you're going to run into a computational bottleneck. So if I take Monte Carlo simulations, risk modeling, the portfolio problem, whether it's optimizing by choosing certain assets, or whether it's by an allocation in assets, or whether it's rebalancing, which all fall under the umbrella of what we know as portfolio optimization. Those require massive computational power. And so traditional CPU and GPU are going to hit very quickly physical and cost limits. Now, we're going to see what it is that is being done today and what it is that quantum can actually start doing today and in the future. And when I say in the future, it's really in the near future, not in 10 years. So the next competitive edge in finance will come from quantum advantage and not just data advantage. What I mean by this is that data advantage by itself is extremely important when you talk about curating data. When you are obtaining data as a financial institution, you need to make sure that your data doesn't have errors. You need to make sure you can process your data, that it's high quality data. So that by itself is already a big issue. But treating that data, processing that data, and getting something meaningful out of it is also the biggest challenge. And that's where there's a strong belief that quantum and the financial institutions who are getting on board in quantum are going to get the edge and are going to get the advantage. And we're going to explain why. So first of all, quantum computing, what I call from hype to deployment. So where were we and where we are today? So back in 2016, IBM was actually the first to release access on their cloud to quantum machines. So when that happened, by the way, I was extremely happy to be able to just launch, even do a one Hadamard gate and measure a superposition on the 1 qubit processor. Like, you need to understand that for someone like me who has been for so long in that area, seeing this, being able to write a line of code, send it to a quantum computer and receive a measurement result and saying, I want, for example, 1,024 shots of that circuit, and you give me a distribution, seeing that you have a Hadamard gate superposition and having a measurement that is almost 50-50, if you take into consideration that that there's some noise, obviously. So it was remarkable. It was really the area where we are starting to see the computation taking place. And so ever since, there has been, a big momentum back in 2020. And I always say that one of the reasons why 2020 really had a big momentum in quantum really comes down to the fact that optimization problems, especially when you need to do in the healthcare system, vaccine discovery and protein folding, it has been shown how much potential quantum computing has for optimization problem. And I think that there's been a strong momentum of people saying, okay, we really need to go over the bottlenecks we have today for optimization problem, because when we face a crisis, we really need to be able to react very quickly, and we also need to be proactive, not just reactive. And that's where the whole momentum happened. And it's good that this momentum happened, because this is what uncovered all the quantum momentum we have today, which will keep growing. And so major banks have gotten on board with that quantum momentum. JP Morgan is one of them. They have had a remarkable team of almost 100 people working on quantum. It was led by Marco Pistoia. HSBC has been working on quantum. Goldman Sachs has been working on quantum. Crédit Agricole in France has been working on quantum. And that's just to name a few, because there are others that are working on quantum. Some of them are not doing public announcements, probably. Others are doing. So it really comes down to the articles also you see on archive, where you can see that there is someone that is working on quantum, might not necessarily do a public announcement about it, but you can see in the articles that there are people working on that field. And it's great, because this is really giving a strong signal that this vertical is really paying attention to that technology. And one thing that is going to sound a little bit controversial, but that is extremely important for me to note here, is that for these institutions, the value is not in the hardware, it's in the problem framing and pipeline design. And what do I mean by this? You can have an amazing quantum computer, right? But if you don't find the proper way to map your use cases to it and to integrate it within an existing operational workflow in a financial sector, no one's going to take it. And that's why I've always, been very insisting in the narrative of, you need to make sure that you know how to integrate your system and your solutions to what people are doing, to compare it to what they are already doing and showing the value, rather than just saying, I'm selling you a system that is quantum. Of course, all of us love quantum, and all of you in the audience are probably extremely excited about learning about quantum technologies, and that's great, and that's what you should do. But we should just keep in mind that this is not just the sole reason people are going to get on board. They need to find a way to deploy internally. They need to find a way to make sure that when a system runs in production, it means that there's a 99.99% uptime. How can we verify that? How does it integrate as a solution with the existing application? If today you have people in finance that are working on a trading chain, for example, in asset management. If they are working in a trading chain, they need to understand, how does that quantum solution actually integrate? What is the best way for it to be as abstract as possible? Like probably just having a click of a mouse. So of course I'm being extremely demanding, but again, that sector is very demanding. So you cannot expect them to just move away to a different platform, move away to a different server or a different software and tell them, now you're going to work like this because quantum is better. They're not going to do it. So we need to make sure that there's a proper integration. And with that said, that's what we are going to discuss today in depth. So first of all, the financial motivation, why we are bringing quantum into these institutions, the optimization problems, quantum machine learning, and post-quantum cybersecurity. So those are the three aspects I'm going to cover. Again, I'm not going to go deep dive into the technical aspects of these. Do not expect to see equations. Do not expect to see that kind of things. But I would be more than happy to take those offline, or if you have any questions at the end, I'll be more than happy to answer those. Also, I'll be discussing something that is very relevant for you in the audience, is the roadmap for the future of quantum and the talent. And when I say future, I just mean in the next 5 years. I don't mean something in 20 years. So you're going to see that there's a good problem that we're going to have for folks like you, is the talent shortage. We're not going to have enough people who are skilled in quantum. And we are going to see also what will be interesting for you guys to also focus on if you want to go into that sector. And then I'll leave the room for questions and answers. So why finance is a sector that we consider today to be quantum ready? So finance, as you know, is mathematically very formal and computationally very intensive. So that's a perfect match for quantum, because quantum is addressing the classical bottlenecks of a specific category of problems. And so, for example, problems that can naturally be expressed as linear systems or constrained optimizations are great problems that can map into quantum linear algebra. And so if you look at the Venn diagram here, between the value, the data structure, and complexity, that's where finance falls right in the middle. And that's why having these three components makes it a perfect candidate to quantum computing. Of course, we do not expect quantum to solve all the problems that we have in finance from a computational point of view, that's for sure, but at least it can address several problems which can unlock a lot of potential and a lot of money for these institutions. Now, how do we bring quantum to these institutions? So that was the very first challenge I faced when I switched from academics to asset management, because you are into a new world, which for me, I was not familiar with that. I've never been in finance before. I was someone really fresh from academia. After my PhD, went into research, went into teaching. So I was not familiar at all with the world of finance. So that was a first challenge for me. A second challenge is that whenever I was teaching my courses or whenever I was doing my research and presenting my results, I was in front of an audience that is like you, an audience that knows what quantum is, an audience where you can say superposition, entanglement, they'll understand what you mean. And that was not the case when I joined Point 72. And that's not their fault. That's actually not a sector that is doing quantum. So that's perfectly normal for them not to be aware what quantum computing is. So that was a second challenge. A third challenge was really around the hype that quantum had at the time. So, and that to some extent still has today. And when I say hype, I don't mean that quantum is overhyped. I'm just saying that there are parts of quantum which are not true that people are believing to be true. One of them is, for example, if someone tells you quantum is 30 years away, Well, that's not true, because based on the roadmaps that we have today and the proof of concepts and the different algorithms, we know the value is sooner. But if someone tells you the quantum advantage is tomorrow, then it's also very questionable. But so how do you know the right from the wrong? And so for these people who do not have any technical background in quantum, who just learn about quantum, maybe from reading articles online or from reading titles in magazines, those are not always written by people who fully understand the technology, because again, it's an extremely complex technology. There's quantum mechanics at the heart of it. You need to understand computing complexity. You need to understand a lot of things. So that's not easy. And so one thing that I started was awareness. And so what I wanted to do is, first of all, setting a roadmap for them, which was based on 5 points. And awareness, starting by publishing white papers where I start to explain, for example, what is really the risk on cryptography? What are the cryptography protocols which can be at risk and why? What's the estimation for these cryptography protocols to be at risk? Then start to explain why quantum is an interesting technology for optimization problem, etc. Start to get some momentum, start to get people asking questions and give them the time to process. They read that article, then they reach out to you, they start asking questions, and surprisingly, a lot of people started to reach out, and a lot of people started to say, you know what, we're happy we have someone internally now who can start helping us understand this technology, because not only do we find it complex to understand, we sometimes hear opposite things when we read different articles, and we really need to understand the false from the hype. And that's really why the awareness part was extremely important. Then after the awareness part, that's when we were more ready to do what we call the executive alignment and start hosting roundtables to align the technical exploration with business KPIs. So now that we are starting to understand what the technology is about, how can that technology help us? What it is that we do internally, and what it is that we do and face a certain bottleneck, and how can we address it with quantum, right? And so based on those discussions, that's where the use cases started to pop up. And that's where I needed them as an audience to help me, because I wasn't in the world of finance, and that was very difficult for me to really understand what it is that they do every day where quantum can help. So yes, I cannot answer any question in quantum, but I could not answer any question in finance. And so that needed a lot of work also on my part to be up to speed and start to speak their language. Because if someone tells me, I want a better way to have my alpha signal generation, like, to me, it didn't make any sense to hear the word alpha signal generation. And then I started to understand that what that means in trading is that it's a signal that you get from the data to understand a tendency in the market. So all I'm saying is that if I was able to do it, then anyone can do it, because I was completely out of that world. So once I started to understand what it is that they're doing, and we started to have that trust and that exchange, we started to understand what can be mapped as a use case that can be interesting. Now, of course, everyone talks to you in finance, like the first thing they tell you is portfolio optimization. But first of all, portfolio optimization is an umbrella of several problems in the portfolio. And second, whenever you are doing portfolio optimization and you want to present it to a bank or an asset management, you need to show what it is that you are actually optimizing in that category of problem. How does it compare to what they are doing? And why is your solution better? So if you tell me people are solving a quadratic problem that is convex, and I'm going to show that quantum is better, then I'm going to question you. Is there really a quantum algorithm that is better for convex problems, given how optimal actual computers are, classical computers, to solve convex problems? So that would raise questions. But if you tell me I have an approach for non-convex problems where I can now allow people to find the global minimum instead of falling in a local minima in my landscape of problems, then now I'm listening and I'm interested to hear what you have to say. So it really comes down to which use cases are you choosing and how well are you mapping those. Then obviously, once we understand the use case, there's the whole training part that comes with it, because do not expect verticals to just hire a team of 20 quantum computing experts. That's not how it's going to happen. And you can see that today with AI. People are being trained to use AI. We're not bringing LLM experts to have, like, we're probably bringing 1 or 2 LLM experts. We need them, yes, but we're not bringing a team of 25 LLM experts to operate in a sector. What we need from those LLM people who are hiring, or from a company to who we are asking services, is to train our internal workforce. So fortunately, in a hedge fund, you have a lot of people in the tech that are very good programmers and very good developers. And so you can train them in order to use the available libraries in Quantum and start to teach them how you can start calling these libraries, how it is that you integrate it with the existing workflow, etc., by doing several workshops. So again, another skill that you really need is development. You need to be a good developer in order to go into any sector, whether it's healthcare, finance, logistics, because you'll be working with these teams. So if you don't write code, that's going to be a challenge for you. And 5, and most of all, the integration. Those people already have very well established pipelines. They're not going to disrupt these pipelines to make Quantum work. Except if you tell me that I'm going to switch to Quantum and get a 250x better revenue, then yeah, they'll probably consider it. But if you tell them I'm going to ditch that working pipeline, you need to take into consideration not just the ROI, you need to consider that this is something that is well maintained, that is something that has a good support, that is something that worked, that has been working for years. If you rely on a quantum computer today in production, how can you make sure that you have an uptime? How can you make sure that you have priority to sending a job in the queue? How can you make sure that you have data that is being protected? So all of these questions are going to be asked, and you need to find a solution. So integration from the hardware side, and also integration from the software side, because you need to find the best way to integrate your solution in something that people can use and not have to reinvent the wheel in order to use your solution. And so the key pain points is really comes down to, there's a disconnect between the theoretical quantum algorithms and the production grade finance systems. And so there's a vendor fragmentation. Hardware specific APIs will limit the portability, and that's why it's important to be hardware agnostic as much as possible. And there's also a talent shortage. So when I say not enough bilinguals, I mean that people who speak finance and speak quantum, both languages, those people are extremely rare. Extremely rare. So you find people who know finance very well, you find people who know quantum very well, but a word of both, that's very complicated. And so to measure the success, the quantum return on investment is more about the readiness than the short-term profit. So you need to really be ready to tackle the big time for quantum. So we'll start with optimization. So the purpose here is to link the financial optimization problem to a quantum native math problem. And so we have portfolio optimization, we have risk parity, asset allocation, credit scoring, etc. Now today, what is being used? This is important to compare to today. Portfolio optimization in a textbook formula is about the mean variance, where you have your expected returns, the covariance matrix, you're minimizing a cost function, and then you're finding the best, the minimal of that cost function, and you're saying, this is where my portfolio is optimized, right? And then there's the gradient descent problem, usually used in machine learning, and there's also simulated annealing that is used. But all of these are going to struggle with combinatorial scaling, because the more and more points you have, or the more and more constraints you have, the scaling is going to be catastrophic. And that's where quantum frameworks can allow encoding cost functions into quantum energy landscapes. And let's see how and what is promising. So before everyone jumps aboard, of course, Tensor Networks is not a quantum approach. It's more a quantum-inspired approach. But why do I list it here? Because today, when you are providing a solution for a financial service, and keep in mind that I'm speaking here in 2021, so we didn't have a clear roadmap or machines where we have logical qubits, or we have, in the hundreds in terms of physical qubits. And so back then, when you needed to start showing value for quantum, that was much more difficult than today. But one approach was to let's say if we want to look at a problem from a quantum approach, but want to execute it on GPU. And that's where there's been a lot of momentum for tensor networks, because tensor networks have been used for quantum chemistry. And so the idea was, can I turn a finance problem into a quantum chemistry problem and use the tensor networks approach and find a solution? And the answer is yes. And there are several articles that you can find on Google Scholar regarding this approach, which actually shows you that the benefit here is that you are pushing back the classical boundary of computation for these types of problem. And that for financial systems is a big win. For financial services, sorry, it's a big win, because it might not be a pure quantum solution. Yes, it's inspired by quantum, but it allows me to go beyond what I can do today. And to them, that can mean millions. So they're definitely going to be interested in that solution, which is not relying on a hardware that still needs error correction or maturity. So that's why I wanted to list it here, because they'll still consider that to be a non-classical approach in the terms that it's inspired by quantum. But the good thing is that you can execute it today. And then there's been also a great interest in HHL algorithm, the Harrow-Hasidim-Lloyd algorithm, because it can allow you to transform the portfolio optimization problem into a set of linear equation. And we have the promise here that it can work exponentially faster. And the good thing is that you have a great article, for example, that was published by JP Morgan on the NISC HHL version of this algorithm, where they adapt it to near-term devices and they show early results, which was at the time done, I think, if I'm not mistaken, on the Quantinuum H1 device. So this was also two approaches where you can start to feel that you are now moving away from the classical bottleneck and starting to have a quantum solution. And so here, as you can see, the goal is to map portfolio weights to quantum states and use hybrid solvers. So you always have a configuration where you're going to have classical. It can be in the pre or post processing with a quantum backend for the matrix inversion. Why? Because that quantum backend is actually going to be the one speeding up the calculation, because matrix inversion is the one that is the most computationally costly. And so in results, what you can have is a comparable accuracy in the optimum of the portfolio, reduced parameter search space, because instead of going to every solution to find the best one, you are able to work not in a series of solutions, but really converge back to the solution with less number of searchable solutions. And then you can scale with more assets easily. So for example, what we've seen with tensor networks is that due to the property of matrix sparsity, you are able to scale in a much easier manner than you would do with a classical solver. And here I'm speaking about non-convex problem, because convex problem usually tell you that you are ditching away several constraints because you don't want to change the landscape of a problem. So for those who aren't familiar, when I say convex, it means that consider that as the inverse of a parabola. So you just have one minimum. You have something that goes like this. So you just have one minimum. It's very easy classically to find. Algorithms are extremely optimized classically to find it. But when you have a landscape that goes like this, where you have several minima and you need to find the global one, there's the problem of falling in a local minima, where it will return a solution, but that's not the optimal one. That's a close to optimal, but not the optimal one. And so that's where these two approaches can allow you to go over this. And tensor networks, the advantage is that until there's a maturity of the quantum hardware, it allows you at least to push that boundary a little bit until an algorithm like HHL takes over. Now, there's, of course, people are going to say there's QAOA. Yes, but the big problem in those type of algorithms can be the scalability when you are not working in binary encodings, because you need to understand that for a portfolio manager, when you have a budget and you need to allocate it to assets, they're not looking for zeros and ones. What they're looking for is to really have a set of integers. So for example, or a percentage. And that's where you will need an additional encoding, and that can create an overhead. So that's why I haven't really mentioned for that type of problem QAOA. So next is quantum machine learning, and why there can be a lot of interest. So basically, it really comes down to a time series analysis. So a lot of the data comes as time series. And we would like really two things. First of all, in our data, we would like to recognize anomalies. That's one thing where machine learning can help. And we would like also to do a proper forecasting. What is our expected next day price? If we have something that works in a cycle, if we have something that has been working for, let's say, data that we have over 10 years, can we use that historical data in order to get a better prediction for the next day? What if we are using several features in our data? It becomes computationally more intensive for a machine learning model. So can quantum in that aspect help? And a very also important aspect is quantum machine learning can enable us with less data to have as good or even better prediction. And that's what we are going to see now. So here is, for example, a small example of a classification here where we are adding for the the KPCA approach with a quantum kernel. And so what is the reason, just in very brief words, why we are seeing this difference? This difference really comes down to the fact that when you are encoding all your features and you are doing what we call a feature mapping in machine learning, when you are using a quantum approach to do it, you're going to project those features into a quantum encoding, so a quantum Hilbert space. And the difference is that your correlations are now going to look very different. For people who have studied signal theory, think of it as having a signal represented with time or a signal represented by frequency by doing a Fourier transform. So you're going to see that the result of your signal is very different. You're going to see things you cannot see in the time convolution that you are going to see in the frequency convolution. So here for machine learning, this is really the same. What we are seeing is that we can uncover some correlations or some patterns using a quantum kernel that we cannot see classically. Now, of course, when you need to execute these today on a quantum computer, they are extremely costly. So the best you can do is run them on a classical computer. And of course, we are limited by the number of qubits we can encode. And we also have a much longer time to train every epoch on our training data set for a quantum algorithm. But if time is not an issue for you, if you are, let's say, if a classical machine learning takes 1 second per epoch, it might take 20 seconds per epoch for a quantum kernel. But if in the end you have the luxury of waiting a little bit to get your result, you're going to already get value from a quantum machine learning algorithm that you have run on a classical machine for, again, a small set of data and a small set of features, because simply with the number of qubits that you can simulate, you're going to be limited. And so, and that's what I was explaining now. What it shows is that there's a long-term promise. So it shows that when I'll be able to scale QML, I can already be sure that I'm going to already uncover in much larger data sets and with a larger number of features, a lot of interesting correlations that today I cannot simulate because it's too costly on a classical machine learning approach, or that I cannot even simulate because, not that I cannot simulate, sorry, but that I cannot uncover because the feature mapping classically does not allow me simply to uncover these correlations. Now I'm going to discuss a little bit as the last panel, the cybersecurity and post-quantum cryptography, because obviously, as you know, financial services have data that is extremely sensitive. So whether it's transactional data or whether it's also data that is at rest that they have, this data really needs to be secure against quantum computing approaches. And as we know, there's a clear understanding both by the publication by NIST and the recommendations that RSA and ECC are not going to be the best approach anymore for encryption because they are vulnerable by quantum computers and quantum algorithms. And so that's where there has been a PQC transition that has taken place. But of course, for me, for someone who comes from the world of quantum communications, I'm a big advocate of having to move to QKD in the future. And why? Because QKD is security at the heart of quantum mechanics. We can verify the security, we can verify the intrusion. We have the no cloning theorem, which allows us to know that someone has been intruding our channel. And most importantly, because PQC is just a stopgap. Why? Because post-quantum cryptography tells you okay, if RSA and ECC are vulnerable, I'm just going to switch to another algorithm, which is not. Okay, that's a great approach at the beginning because this is what you need to do. So you really need to work with PQC. But saying this is what I'm going to rely on for the rest of my life is a very bad move because you also do not know today what quantum algorithm you might uncover that can put these new cryptography protocols in jeopardy. Also, we need to take into consideration a very important point is that today most of these cryptography protocols that have been submitted after the RSA and ECC are becoming obsolete were algorithms that were submitted at the time where there was a competition and RSA won. So some of these algorithms have been uncovered to be breakable by a classical computer today. So that's why you need what we call an agile crypto system, where you can move from one PQC algorithm to another with the least cost, but eventually in the end to move back to QKD. And that's really my personal view of why QKD is extremely important. Now, of course, crypto agility in practice, how does that work? You need to do an inventory of the existing cryptographic dependencies you have, prioritize the high risk workflows. If you see that you have RSA here or ECC there, you really need to switch quickly. Symmetric cryptography for now, unless it's AES 128, are not considered to be very problematic because you still have a quadratic speedup with Grover, keeping in mind that Grover is the best search speedup algorithm we know of today. What if there is a new one that says instead of having a power 2 speedup, you have a power 4 speedup, then AES 256 becomes obsolete. So that's why one needs to be very careful with PQC approaches and need to always assess algorithms that are still today considered not at risk because they could be at risk tomorrow. And with the hardware that is being available in the coming years, we won't have enough time to switch. So that's very important to note that. Then we need to integrate the PQC gradually and then start to combine PQC with QKD where applicable. Of course, something today we can also start to implement for key management system is quantum random number generator because those give you true randomness and there's no underlying seed number that could be uncovered in order to understand how all these thousands of keys have been generated and what is the underlying algorithm beneath them, where knowing one key helps you uncover all the rest. So that's why having true randomness injected is extremely important. And so today, how do we look for the roadmap of quantum adoption in the financial services? So between 0 and 2 years, I would say, and keep in mind that I would even say 0 to 1 year for the awareness and pilots, really, like financial services who have not yet started on quantum, in my opinion, of course, this is my own opinion, I think they're already late. I'm like, for example, when I was working at Point 72, we had started that in 2021. So that was really, really back then. But so that's why it's extremely important for the awareness and pilots to have already started. And within 2 years to already have hybrid quantum workflows that are in production. Using the current machines we have on the cloud coupled with HPC centers. That's why, for example, the NVQ link announcement is extremely important because it makes quantum adaptable into HPC centers because there always needs to be that back and forth communication between QPU GPUs and QPU CPUs. And then within 5 to 10 years, that's where we will really have in production fault-tolerant applications at a very large scale. Or also think about quantum networks being more and more advanced and think of it as we'll be able to connect several nodes of quantum computers together. And that's where the large scale optimization, the new encryption with QKD is going to take place. So of course, this remained to me a bit of an optimistic timeline, not in the sense of being optimistic to the new hardware that are going to come up, more like I have enough time to act. I would say that you could probably say you have 0 years for the first one, 2 years for the second, 5 years for the third. But again, that's my personal recommendation. Now, all of these, of course, are going to cause a lot of gap in the quantum talent. Think a little bit of what happened if you are familiar with this or have read about it. There has been a lot of shortage talent at the end of the 1990s for computing developers. And so there's been a lot of need to hire developers, and that's how the sector really exploded. Quantum is going to face the same problem because quantum is even more complex as a technology, and there's going to be a big need for people who have several skills together, like a finance skill, a physics skill, and a software development skill. For example, we've seen a lot of people with physics background. We see them a lot working in insurance company, in quantitative finance, because they have the knowledge of mathematical modeling, because they have the knowledge of mathematics and physics, of software development. But now we're going to add to this combo the quantum computing talent. And so having all of these is really going to place you perfectly in the market. And this generalizes not just for the financial sector, but really to any sector that is going to be working with quantum. And so the road ahead is that quantum computing, and since already at least a couple of years, is not a matter of is it going to happen, but it's when is it going to happen. A hybrid approach is the best path to value, and this is what we are seeing with all the announcement. Again, NVQ Link from NVIDIA is the biggest example of this. And also, the institutions that prepare now will own the advantage later. My personal opinion is that if people wait until these devices are operational to start working with quantum, they're going to have a big delay, which they will eventually have a very hard time to catch up with. So that's why preparing today does not mean that financial institutions need to pay billions every year. They can just be up to date with what is happening, do a minor investment compared to other technologies, but at least be ready to really own it once the technology matures. So as for me, I have my own consulting firm where I do help people in various sectors adopt both quantum AI and HPC. And this also enables me to guide them without any, I would say, conflict of interest. That's one approach. And second, because I do understand all of these verticals, all of these technologies, sorry, and the vertical, that allows me to really understand what it is that they expect and when do they consider that this technology is viable for them. And with that said, thank you for your attention. So you can find also my website here and my LinkedIn, and I'll be happy to connect with any one of you after the call.
Thank you, really. Thank you very much, Dr. Joe. It's been a very interesting talk about the application in the area of finance and that you are working and how we can train ourselves in this area. We have some questions. What inspired you to focus on the intersection of quantum computing and finance?
Great question. So what really motivated me, and it really comes down to my training as a researcher, I would say, is finding a solution for a complex problem where we know that the current algorithms we have classically are simply not working. And so when you've been working in quantum and you know that you now have, so I think all of you are familiar when we learned, for example, the Dutch algorithm, or when we learned the Grover algorithm, we refer to what we call oracle calls, right? Like how many oracle calls do you need? How a quantum algorithm allows you to have less oracle calls. And so when you start to see how these can map into finance, but you know that the people in that vertical do not necessarily have your knowledge in quantum, that gets you extremely interested in being the problem solver. You now have a very novel approach, and that's what got me excited. Now, to be honest, why finance and not another sector? To be honest, because that was the opportunity that I got at the beginning, but it's also because finance was the easiest one for me to approach. Healthcare would have been very challenging because there's a lot of chemistry, of biology involved, which would have needed me to really be more up to speed. I felt that finance, due to the fact that a lot of people who already studied physics and math go into quantitative finance, I found it easier to go to that sector.
Okay, thank you. Have a question of the public.
Yeah.
What are the key challenge for financial institutions when integrating quantum computing into their innovation pipelines?
That's a great question. So first one I would say is what we call security risk and then operational risk. So what we mean by security risk is that financial institutions are extremely concerned about where their data is going. So, for example, if they are doing any computation on the cloud, usually they do have direct access to cloud providers via dedicated lines to the computing center. That's how I would say paranoid they are for their data. So today, when you are telling a financial institution, we're going to run that quantum algorithm, they're going to tell you where, what backend, where is it located, what data center, what's the protection for this one, can I have direct access? And so all of these questions are going to raise concerns in terms of security. Then the second one is the operational risk. So how do you implement your quantum backend in that pipeline production? How do you make sure that it does not go down? And if it goes down, what's the maintenance? How many times is it going to be out of service? Do you have a backup solution for it? Should you go to three quantum computing providers to say if one of them goes down, you go to the other two in the meantime? So all of these are questions that quantum computing vendors are starting to think about, but I just hope that the problem will not come to a point where we have too many problems to solve and not enough solutions to provide. Because again, the supply chain in quantum is extremely limited. We've seen the problem in GPUs, right? We've seen with AI the boom of GPUs, people wanting to have GPUs, and it's something we know how to produce. But for quantum, like, do we have these massive production chains where we can address the public need? And there's also the third point, the timing that you can allocate for that quantum machine. Today, it's still really experimental. You can maybe book an hour or you can send your job in a queue. When you are working as a financial institution, you definitely don't have time to do that. You need to have the machine ready for you. You even need to have your own endpoint, your own server. So how are these going to be addressed? These are questions that we are still figuring out. And I'm also helping, vendors in that sense to address these questions, because those are going to definitely be asked.
Thank you, doctor. And another question: How
Yeah.
do you how did your experience in both academy and industry shape your perspective on practical applications of quantum technologies?
That's a great question. So, the academic perspective helped me understand really what is feasible and what is not feasible in quantum. If I didn't have that academic expertise, if I never studied quantum computing, never taught it, never did research about it, I basically would not really have strong arguments to back up what I'm saying in terms of what can be done. The finance one helps me understand the mapping of the use case. So yes, I now know the technology, but where do I apply it and how do I apply it? Because again, I can tell you, you know what? I've written a small Jupyter notebook that allows you to solve this here. Take it, run it. No one's going to use it. They're going to be happy to see it as a presentation, but no one's going to be integrating that in their workflow. But if I tell them, you know what, you are using, for example, Gurobi, or you are using Mathematica, and now I have created a plugin within Gurobi or Mathematica that allows you to hit a button to solve quantumly your problem, then yeah, now they're interested in listening. So this is really how both industries help me understood what's the best way to bring the technology.
Thank you. A question of Tabitha: Do
Yeah.
you think utilization of quantum networks will help mitigate security concerns until we have the ability to test the prospect post quantum encryptation?
So I would be interested in a follow-up question in asking what do you mean by the testing? So if she if she can write a follow-up on that one. I think you're muted, sorry.
Sorry.
Yeah.
What has been the most challenging problem you have faced in applying quantum computing to finance, and how did you overcome it?
Yes. So the big challenge has been first to make sure that the solution I was providing actually made sense for the people. Because I would say, for example, and I mentioned QAOA in the talk. So I would say, here, look, there's QAOA that allows you to do binary allocation of the portfolio. And then I would get portfolio managers telling me, but that's not what we do. So that was really a slap in the face because I didn't know how they operate. And I was so happy, to say, yeah, I provided the solution, but no, that's not what they want to do. So that was the first challenge. And the second challenge was how to really take their problem into the world of quantum. Again, we have a tendency sometimes in the quantum ecosystem to just say, hey, here's what we did with quantum, and show it in their face, and here, now you can use it. No one's going to listen to you. People are going to say, we are going to work with your solution if it fits what we need. And so the challenge has been to really understand what it is that they do every day, and even try myself to do what they do every day, learning those classical approaches and starting to say, okay, now I'm starting to understand where a solution that I can propose starts to make sense. And that's really how we got the conversation going. And I wouldn't say I have that familiarity with all the sectors. I have that familiarity mostly in finance because that's the sector I've been exposed to. But if I have to go to another sector, yes, I'll definitely going. I now know what it is that I need to do as my homework. I need to understand what it is that they do. I need to meet them in their world. I need to speak their language and then bring my quantum expertise on the table.
Thank you, Dr. Joe. This a really interesting question. Are there training programs, workshop, or oil and resource you recommend for students in Mexico and Latin America to prepare careers in quantum finance?
Yes. So in quantum finance, what I would say would be very helpful is I would rely first a little bit on the literature of on what has been done so far, especially by the team of JP Morgan. Any publication you can find by Goldman Sachs and HSBC also can be very helpful. But yeah, do not expect to find very tailored courses. Well, they'll tell you this is what you can do for quantum in finance. We're not at that stage yet where it's very clear. It's more understand the whole quantum computing approaches, read a little bit how these have been applied to finance, and you have enough luggage to start. There's still a research phase that is being addressed in that sense. It's not something that is very well established yet, and that's why there's a lot of work to be done.
Okay. Another question. How how could regional initiatives help build a quantum-ready workforce in finance across Latin America?
Can you sorry repeat the question?
Yes. How could regional initiatives help build a quantum-ready workforce in finance across Latin America?
Uh, I'm just sorry. I'm just not understanding the first couple of words. How cool? Sorry.
How could regional initiatives
Regional initiative. Yeah.
help build a quantum-ready workforce in finance across Latin America?
Yes. So, well, for example, the discussion we are having today is a great initiative, right? And I think that really having having the work that the whole team at QBitHub is doing, um, having that mapping between the work in academics and also the industry, prepare students to have that transition, understanding that what you are studying today is applicable. What you are studying today is something that is being done in terms of research, is one approach. Another approach is making the resources available locally. Sometimes, I would say translation of these can help a lot, because I know that, for example, for GCC regions, when you have the ability to read something in the native language can really help. So that's another approach of it. And the third, I think, is trying to bring as much as you can conferences locally, because that's going to bring a lot of momentum. This is, for example, something I've done when I was in academics. I've done the first quantum computing conference in Lebanon at the time, and the momentum that it got really blew my mind because I did not expect that to happen. But people started seeing that there's something concrete. They saw these researchers coming from abroad and giving their talks, and they were like, okay, now we are seeing something and it's happening here where we are. So that's why I think that this can also reproduce itself very well in Latin America. And Latin America, like it's even a much bigger region. It has much a much a bigger potential. So if that can be applied to a small region of the world, then it can definitely be applied and multiplied by a factor of 100 in a region like Latin America.
Thank you. And a final question. What
Yeah.
advice would you give to students in Mexico and Latin America who aspire to work on quantum application in finance globally?
Yes. So I think that the best advice I could give is probably if you cannot find a position where you are working directly on quantum in finance, it would really be to start finding an internship as as a quantitative analyst, for example, at an asset management fund or at a bank, because that will expose you to the problems that they are working on daily. If you also have, by training your luggage in quantum approaches, you could very well start suggesting using these. So just for people to understand a little bit how that works, when you are working at an asset management fund, you usually have what we call pods of portfolio managers. So you have a portfolio manager who has quantitative research and analyst in their team. And usually those people do market research for them. They also work on the algorithms, etc. If you happen to be in a pod of a portfolio manager, you'll already be exposed to what they are doing classically, and having your quantum knowledge, you might bring it on the table. Because the reason I'm saying that this is a good approach, because if you have a pod of a portfolio manager who has a quantitative research, who knows quantum, they're not going to share that with anybody. So don't expect the firm to just spread that algorithm to every pod of PMs. They're just going to keep it for them. So that's why I'm saying that in that way, you could probably uh, you know, uh, reach what you want to do as a target in a much more encouraged way, so to speak. So this is one approach that I would give. I think it's not really relevant of the location where you are located, like whether you're in Latin America, Europe, or Asia. It really comes down to what's the best way to make people in the financial sector aware of that technology. So if you happen to be working in an innovation team, then or if you see that there's an innovation team in a bank working on finance, then the best way is to probably try to apply to them. If you feel that applying might be a little bit challenging, then the best way would be to go and attend conferences and do a lot of networking. So if you happen to have conferences in Latin America, then go and meet those people, speak with them, introduce yourself, get to know what they are doing, because that helps a lot. Then if you want to land an internship later on, or then probably land a job, that's where you're going to find a lot of good responses, because you've done your networking part. I think when I was doing my PhD, one thing I regret is not doing enough networking. I think that I could have done a better job at that. And so my advice to anyone who still has that chance is to really leverage your network as much as possible. This is extremely important.
Thank you, Dr. Joe. It's a real pleasure you have here and excellent talk with you. And expect see you in the future again in this event.
Awesome. Thank you so much. That was a great talk and great audience. I liked all the questions, and thank you so much for the opportunity. Appreciate it. Thank you.